Hello, this is Larry Tentarelli with a brief markets update video for Blue Chip Daily Trend Report. Today is November 3rd, 2022. We're going to take a look at the S&P 500. It just hit our target level of 3,900, and then I'll give you a brief update on current positioning and the current technical outlook. This should be maybe a 5-minute video. So we'll start with the disclaimer, which says that everything in the video is for informational purposes only. It's not financial advice. So October 17, I alerted Blue Chip Daily subscribers to expect a technical rally in the S&P 500 with a 3,900 target level. The S&P closed that day at 3677, and then 9 days later, it hit the 3,900 target. So October 17, from our members' Twitter page in the nightly aftermarkets video, I let members know to expect a counter trend rally in the S&P 500, key technical signals to look for, and that 38 to 3,900 was the high-end target. Next day, October 18, pre-market, I updated the 3,900 target level with a current chart of the S&P 500. And then we'll take a look. So it closed that day 3677. When I put out the technical alert, 9 days later, traded up and closed at 3901. So we'll take a look at a bigger chart there in current positioning. So current positioning right now, we went into yesterday's Fed meeting at 90% cash. I alerted subscribers, and I've been alerting on the public Twitter page basically all year not to expect a Fed pivot anytime soon. So my current cash allocation target is somewhere between 70 to 80% based on how the charts develop, but it's more defensive and much more selective right now. So the current technical view, S&P 500, as long as it holds over 3650, then I'll give this recent recovery move the benefit of the doubt. It's not my favorite chart. It's in a downtrend below the 200-day moving average, but it is trying to recover. We'll talk about that some more. 3,500 is the major recent low support level. So the problem for the S&P is it's being weighed down by the NASDAQ 100 mega caps. So Apple, Amazon, Google, Meta, and Microsoft make up over 18% of the S&P 500, and then 25% of the S&P 500 is in the technology sector. So my view here, the Dow Jones Industrials is positioned better than the S&P 500. NASDAQ 100 is the weakest of the three. There's much better opportunities outside of the index in select high-quality large-cap stocks. We'll talk about those. Primarily, stocks in uptrends over the 50 and 200-day moving average, I think, offer better opportunities here. Energy and healthcare are our top two ranked sectors currently, and the view remains hold higher cash. Avoid trying to find the lows in any of these tech downtrends, not just the majors, but the software stocks, cloud stocks, some of the semis. Expect volatility, use it to add to uptrends, and then look for opportunities on the pullback. So we'll take a look quickly. S&P 500 went on the buy list here, 3677. 9 days later, hit 3,900, tested that 3 or 4 times. Pulled back yesterday after no pivot from the Fed. So I started a position in SPY the next day, and then I closed it out last week, booked the gains, and I did roll that into the Dow index. Apple is the strongest of the mega caps. It's weaker below the 200-day, pulled back yesterday. It did hold over the June lows. So this is the relatively stronger stock in the NASDAQ 100. Versus Amazon, rolled over, made a new low yesterday. We can see a sharp gap down after earnings. We closed out of Amazon in August. So not to say that when I evaluate these charts, it's not to say that they have to go lower, that they can't go higher, that there can't be any counter trend bounces, anything like that. But if I'm looking to hold positions or put new money to work, I want to look at uptrends and look for pullbacks in the uptrends and not try to find these lows in any of these rollovers. So Amazon, Google made a lower low yesterday. Meta made a lower low yesterday. We closed out of Meta in December, haven't looked back, and it's been pretty much straight down since then. Microsoft made a lower low yesterday. So it's not to say that these stocks can't recover, but I don't have any interest in trying to buy these stocks and maybe try to catch a bounce in a downtrend, because they might have a lot of work to do. Doesn't mean that they can't recover, but I'd much rather focus on established uptrends where I've got support underneath. So healthcare and energy are the top two ranked sectors on our list. So Eli Lilly has been on our weekly focus list quite a lot in 2022. It's on the list this week, and we can just see it. It's trading higher. Institutions have been moving in here, rising moving averages over a lot of support. If I'm looking to hold positions or looking to build positions, these are the types of charts that I want to take a look at right here. Merck, same thing. Now, Merck's had a pretty big breakout move ahead of earnings. It could always pull back. So whenever I put a chart on the list, it doesn't mean that it has to go up tomorrow, that it can't go down tomorrow, but I'm looking for the overall trend. And then I want to look to use this market volatility, maybe to either to start a position, to build a position, anything like that. But Merck has been on our list for quite a while. Energy sector XLE leading year to date. Once again, it could always pull back. Institutions have been moving in. There's a lot of support underneath. I've got an energy position right now, and on any weakness, I'd look to add to these positions. Same thing, ExxonMobil, big breakout. It could always consolidate, but I'd look to use any type of real pullback to either add to positions, start positions, build positions, anything like that. So that's the current outlook. If you'd like to find more of my content, you can find me on Twitter at LMT978. My website is bluechipdaily.com. We have a 30-day free trial. Also, you can see some of our top market calls for 2022. So I shared with you just the brief update, current outlook. This is what I go into a lot of detail with our subscribers every single day on a much more detailed basis. So I appreciate everyone's time. I hope that you enjoyed the video, and I hope to see you online soon. Thank you.